Everyone thinks the biggest cost of owning a home is your mortgage payment, but that's only half the battle. This chart breaks down the average monthly cost of maintaining a property these days. Look at states like California where it costs $3,000 a month on top of your mortgage payment. What's wild is when you think about the average cost of your property taxes that keeps going up every year, your homeowner's insurance, and even HOAs if you have them. So many homeowners go into their homes, and you guys hear me talking about this all the time, and all you ask is, what's the interest rate and what's your monthly payment? Very few homeowners look at the overall cost to homeownership. This is why you can feel house poor even though you have a low interest rate. And that's why I've said time and time again, I could care less what the interest rate is. It is a total sham to make a decision on the biggest house purchase financial decision you're going to make off of one thing, which most people make it based off interest rate. This is where the first lien HELOC can be an entirely new game changer and a different way to think about home ownership. Instead of being locked into a 30-year mortgage, what if you could pay your home off in years and giving you access to liquidity throughout the entire time? Most people do not have enough reserves to the side and rainy day money that they have access to. This is why the banks force you to either do a refinance or you do a HELOC on your home. But here's the kicker with the traditional HELOC. That draw period that most banks give you lasts maybe 3 to 5 years. And for most of you, you're not going to throw more money towards that HELOC payment because you want to stay liquid. You want to keep your cash in the bank. And the biggest problem that we're going to see here is that all of these folks that took out HELOCs as second mortgages, your draw period is going to expire. And you're going to forget that that payment's going to go from an interest-only payment to a fully amortized mortgage. That payment's going to jump up on you and you won't know what to do. The scary part is you'll either have to find another HELOC to extend your draw period to give you access to the line of credit, or you're going to make the payments, or you're going to be forced to refinance your first and second mortgage, and you're probably going to start that mortgage again on a 30-year mortgage all over. So as so many of you try to take out HELOCs to protect your first mortgage interest rate, if you don't pay that debt off within that draw period and you're forced to refinance because you need cash flow or to save some money, all of that time that you were wasting trying to protect your 2 and 3% interest rate is going to go out the window. That's why if you're starting to feel the squeeze, refinancing into another 30-year fixed mortgage is probably the worst thing you can do. Think outside the box, stop thinking what the banks want you to do, and realize that there are better strategies to home ownership. And if these rising costs are hurting you, send me a DM and I can show you if the first lien HELOC could be a strategy to get you out of debt faster. That way you don't have to worry about all of this other stuff that's going on in the world.